Hey, hello, and welcome to Pro Trader Strategies Market Commentary for Tuesday, August 11th. I'm Eric Wilkinson, and some of you very well may recognize me as the Wofman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that impacts the overall markets with my market analysis. And I do the same thing in these daily market commentaries, but I go a little bit further and layer on top of it some option strategies that I find on any given day to implement into my portfolio based on some guidelines that I teach you guys in webinars or teach those in webinars. And I don't have enough time to really go over all of those details in these daily market commentaries, but check out those webinars because I show you guidelines when we have a market assumption where we need to go in order to find the right strategy for that given assumption. It's not just picking something out of a hat and putting it on based on that assumption. We have specific guidelines that we can follow in order to increase your probabilities of success with trading options. All right, so without further ado, let's get on with the economic data. Across the pond, we got the German economic sentiment coming in at 71.5, expected to be 57.0. The economic data for the economic sentiment for the greater European region came in at 64, expected to be 55. So better than expected across the pond in those economic data points, because those are something that we are going to want to look at. Despite the fact that they're not one of the headline numbers, those are economic sentiments of the overall economy there. We got the National Federation of Independent Businesses Small Business Index. This is a great one because the small businesses are the ones that are going to be driving the economy. And it came in at 98.8, lower than the expected 100. Now, why is that? Probably because we're starting to see extended lockdowns, reissuing of lockdowns, and those small businesses are the ones that are going to be impacted the most. They're the ones that are also the ones that are going to drive our economy going forward. So without them, we are going to suffer as an overall economy here in the United States. So not good to see that one slough off a little bit. We also got the core PPI, which is producer price index. This is a gauge of what the producers in the United States are expecting to pay for the inputs into the manufacturing process. So if we strip out food and energy, that number came in at 0.5, expected to be 0.1. Jamming that stuff back in there, it came in at 0.6, expected to be 0.3. So inflationary gauge, usually a good thing. I'm not really loving inflation when when we see the economy struggling, but inflation is usually a sign that there is buying power going on and people are demanding products, which drives price higher, right? Well, one could also say the weakening of the dollar is driving those prices higher, which isn't really showing any demand whatsoever. It's just that it is showing inflation, right? All right, so that's about it for the economic data. Now, gold really coming off today by about 81 points, just a massive sell-off, over 4% down on the day. Gold bugs are struggling. Looks like it's going to test that 1923 area, which is the highs we saw back in like 2008, 2009-ish area. That's where this Fibonacci line is drawn in from. Well, why is gold coming off? We just talked about the weakening dollar, right? And you're like, Wolfman, you've been saying the weakening dollar is what's driving the demand in gold. Well, right now we're seeing a flight to safety, or a flight to quality, not a flight to safety. Flight to safety would be in gold. This is a flight to quality. And a flight to quality is because there is renewed talk about capital gains tax retrieval, which means people won't have to pay taxes on some of their capital gains, which is due to the equities there, right? So people pulling out of gold and jamming it over there into the equities, that's giving the equities a bit of a lift after overnight really seeing weakness across the board because of those economic data points that we just talked about, the NFIB and the PPI, which, PPI would be considered a positive for the economy, but at the end of the day, people know that it's because of the weakening dollar and not because the economy is really moving. Now, if prices go higher, that could cause people to cut back on spending at a time where we need people spending. All right, crude oil. unchanged for the most part right there at $42. It's above 40. It looks like it's there to stay. That Fibonacci is holding, that 50 Fibonacci. Even above that, the 40 is really holding. And you can see we're starting to build a volume node there. Something else to note, I've talked about this time and time again over there in the equities. Well, the golden cross, when you start seeing the 50-day moving average go above the 200-day moving average, that signals long-term strength. Now, we've been holding above the 9-day, which is short-term strength in the overall market, but a crossover of that 50-day and the 200-day, 50-day being going above the 200-day is long-term bullish for crude oil. So it's going to take a couple days probably. I mean, unless we got a massive rally, which I don't really expect to see happening right away. But we will see that start to merge in as we're kind of trending sideways here in crude oil. All right, bonds off by 2 points on the day right now. And that is because, again, it is a flight to quality where people are wanting to put money into higher flying assets, if you will. And we know the bonds aren't going to go anywhere. We got interest rates basically for the foreseeable future locked in right around here. As a matter of fact, we have a new record, if you will, for junk bonds. Ball Corp issued a junk bond, and they got a below 3% for their 10-year junk bond. And I think it was like 2.87 or something like that, which is an all-time low mark for any company issuing a junk bond. All right, so, which just means they have a really crummy credit rating. All right, so bonds off by 2 points. You're talking, you might be saying, hey, Wolfman, you said 80s was the new thing. Well, it is still basically in and around there. But when you start seeing people pull money out of one asset and drives into the other, right? So we've got the VIX off by about 58 cents right now. And you can see well off the lows of the day there because we're seeing the Dow up over a percentage point on the day, over 300 points. Breaking above this high here, so that is very bullish. This is that cross I was talking about here, where we got the 50-day crossing over the 200-day. That signals long-term strength. I've also been talking about this like I'm blue in the face for several weeks now probably, that we were going to start seeing some weakness over there in the NASDAQ and money flowing into some assets that really were undervalued in a sense, but the blue chips weren't as sexy as the tech stay-at-home trade. This is the reopening trade, and that is starting to look a little bit better here. As you can see, people putting money into the Dow Jones and over there in the E-mini S&Ps. Now, we can say the NASDAQ is pretty much close to going into positive territory here, still negative on the day, but it's going to struggle. I think we're going to start seeing more choppiness in the market, especially around the NASDAQ, as the bulls and the bears kind of fight it out. Some people taking profits that made a good move on this 45-degree angle vertical rise in the NASDAQ. But that's what I was talking about back in March and April, is that the tech sector was going to do well, and the blue chips were going to struggle, because if people are staying at home, that's what they're going to be consuming is tech. Well, if it's a reopening trade, people are going to be consuming other things that are over in the Dow and in the mini S&Ps. So we can see the E-mini S&Ps up about 0.5 percentage point on the day, making a nice move here. Looks like they are going to go up there and test 3,400 relatively soon. We aren't too far away from that, only about 40 points. I mean, that could actually even happen today. I don't know that it really is. I think that we're going to see this market kind of just trickle a little bit higher, but it looks like all-time highs in the E-mini S&Ps are almost a sure thing. Now, let's take a look at the breakdown. This is 30-minute chart here on the E-mini S&Ps. You can see overnight was pretty bullish, but we started getting our economic data that I talked about. The National Federation of Independent Businesses threw a wet blanket on that. We started seeing the PPI numbers, which would be expected to be good economic data point. because it's showing inflation. But I think that people kind of realized, hey, that's because of the weak dollar, and that's not necessarily a good thing for the economy. Well, we got slammed down, and then we started talking about capital gains taxes and how those were going to be kind of lifted for a little while, and the market started celebrating that and well off the lows there. Starting to settle down here, so it's kind of a toss-up. You're going to flip a coin on whether or not we start rallying. I think it's going to be really news-driven or start to sell off towards that end of the day. Now, a couple of things I was looking at. Now we've got Facebook in positive territory. It was a couple of dollars in negative territory earlier this morning. And if you guys remember, I had just put on these trades in Facebook was one of them that I just put the trade on for the for the bit of that sell off, the FANGs and some of these high flyer tech stocks I was talking about. I thought we're going to do rather well there going forward, and starting to see some strength come back into these markets as we saw the NASDAQ almost back into positive territory there. But with Facebook, if you guys remember, I sold the August 290 calls in there for $1.30. I actually was very close to being able to cover these. I think the low is something around 60 cents for those 290 calls. I was working a 60-cent bid, did not get hit on those before the market started rallying here. Still happy with my trade location. 290 is quite a ways away, and like I talked about, I think that these FANGs are going to see some more choppiness here going forward. So I'm going to just keep that order working in case we get a late day sell-off there in that stock there. So when did I? That was yesterday that I sold those. So and then with Adobe was another one I added yesterday. Sold some calls in here, and if you remember, I did the August, sold the 470 calls in there, and I sold those for $1.62. I was trying to get out for 84 cents. I think the low was $1. I didn't feel like chasing it. I'm still pretty happy with that trade location too. I don't know that we're going to necessarily see, like I said, some of these techs that have made some big moves. I think we're going to see more of some choppiness going on and chop in and around where this volume node is kind of building up here. All right. So sticking with those. Another thing I was also looking at is lowering the overall cost basis with PENN. But PENN making a big move today. A lot of people talking about yesterday that they were going to suffer because they aren't in Macau, and that's basically the new Vegas of of basically Asia, and they've done wins there, Las Vegas Sands, all there. Well, PENN's not really getting exposure there. But on the flip side of it, I think that PENN is going to do very well. Why? Because now it's a household name, right? And Barstool Sports is really promoting the heck out of PENN, and a lot of people are following El Presidente, David Portnoy, and a lot of his trades, and he is really pushing PENN, and that is getting a lot of people on board, I believe. So today, I'm not really looking to do those covered calls. Yesterday, I was pretty hot on it. I didn't chase it. I was trying to sell the 65 calls in there for about $1, the SEP 65 calls in there for about $1, and never got hit on those as the market was selling off. Obviously, those calls got cheaper, and I wasn't willing to chase it. Thankfully today, because you can see up 8% on the day as it's making a big move to the upside. So that's all I've got going on right now. Please take a moment to go to ProTraderStrategies.com, sign up for my webinars. It's the roadmap to trading options, where we're going to be talking about, we come up with an assumption. How do we get to the right option strategy? Well, I go into those details in that webinar, so please check that out. Also, know that we are an educational company. We are not trying to get you guys to do these trades that I'm talking about. I'm trying to teach you guys firsthand experience as to what a trader goes through, how we can take advantage of certain situations. But ultimately, what I want you guys to come away with is why we're putting those types of strategies on, when and where and why we're putting them on. All right, so please go there, check out those webinars, because I'll drill down on those devil of the details there. All right, that's all I got for you, other than if you can't take that, take it easy.